That's British Chancellor of the Exchequer, George Osborne, and that is £1 sterling, which, having devalued as much as 30% in 2008-09, should be a source of comfort for him. But it's not. I'm Jamie McGeever, and this is Market Pulse. Well, the IMF hammered home the point yesterday. The UK recovery is non-existent, and the government should reconsider its Plan A austerity drive. With me now to tell us what this all means for sterling is Reuters FX analyst Neil Kimberley. Neil, IMF issues a bleak warning on the UK economy yesterday, cable at a one-month low today.
Obviously the government's already come back, there is no plan B. George Osborne, they've even wheeled out the old Prime Minister David Cameron on Breakfast TV this morning, which is something you wouldn't expect when he's preparing for his main conference speech. So they're a bit rattled about it. And of course, the IMF is high profile, blah, blah. And sterling's looked a bit soggy for a couple of days, and the market was looking for something to hang its hat on. You can't all have the Rand position, you know. The sterling is one that's out there, is looking a bit vulnerable, so the market now getting itself a bit short. It
was an obvious sell, as you say, given those headlines from the IMF, but and we haven't gone below 160. I'm just looking, and the low today is 159.99 on Reuters.
If you've gone short this morning, you're probably a little bit disappointed that you haven't had more follow-through. That said, some guys, one guy in particular I know I respect, he's put out a recommendation this morning to go short of 160 and a quarter with a target of 156.80 and a stop loss of 162.15. The fact that someone like this guy is looking for 156.80 is quite telling to me, because it's revealing that the market can be or is very bearish on the pound. They're looking for some traction. For my own part, can I see it going lower? Yes, I can. 159.04 is where I'd see it going to, around the 55-day moving average. But like all major currencies at the moment, I don't expect it to go crazy. I think it's in a range, and I think at the moment, you know, sterling is a little bit heavy, and there's a lot of talk out there, Jamie, of good sovereign offers between 160.40 and 160.60. Reserve managers possibly doing some portfolio adjustment. When you see those guys coming into the market, it also gives an added reason for the market to be short.
If the market is going short or wanting to put on a short sterling position, and you mentioned the euro there, what does that mean for euro sterling? How much higher can we go in euro sterling?
It's been edging up for a few days. Been a lot of talk of natural interest. A lot of sterling strength against the euro has been tied up with the safe haven status of the pound, given the problems in the eurozone. Now, whether you accept or not that was a coherent argument, it has been the case. If now you feel there's a chink of light at the end of the tunnel for the eurozone crisis, and that chink of light is not an oncoming train, then some of that safe haven status may be eroded. And that, I think, is the key driver of euro sterling going up. Of course, if we get some bad news out of Greece or Spain, or have a falling out about whatever, then we go back into the safe haven again. But at the moment, you can feel that the market wants to believe Mr. Draghi, and that therefore euro sterling is edging up. But it's that 81.17 point in euro sterling which is key. Momentum fund stop entries above opens up 82 cents quite quickly.
The big picture for sterling, as I hinted at the intro, is quite baffling. A 30% devaluation, an independent central bank, an aggressively easing independent central bank, a flexible jobs market, yet we are where we are. Pretty baffling, isn't it?
It is, but this is the UK, isn't it? We don't make a fat lot, so we always have this problem with imported inflation, which is going to be accelerated if sterling starts to take a dive again. But the market is looking for a move. They don't really care whether it goes up or down. And at the moment, the signs are it's going down a little bit, so they jump on the back. When I first came into this market in '85 as a trainee cable trader, my chief dealer told me three things. One, the trend is your friend, and at the moment, sterling looks a bit soggy, so people are going to go with it. Two, you've got to be in it to win it. You know, with a lot of hedge funds book closings at the middle of November, if sterling's going to start to motor, they're going to be on it. And third, specifically to sterling, and London traders will remember this, the older ones anyway, sterling goes up by the staircase and down by the lift shaft. And that's what people do. London loves to sell the pound. It's always been that way. It will ever be.
That's not very patriotic, Neil, is it? London selling the pound?
Mate, I'd sell my granny for a pip, and most people out there. It's not about patriotism, mate. It's about the bottom line.
OK, Neil, thank you very much. My thanks there to Reuters' Neil Kimberley. That's all from us for now, but join us every day at this time to take the pulse of the market. I'm Jamie McGeever. This is Reuters.